Last did you review your policy, your life insurance policy with your advisor? When last did you call your financial advisor for you to review your policy to know the status of your life insurance policy? Today, I'm going to be reviewing a policy with you and what you need to check in your policy. So when you talk about life insurance, we have different types of life insurance policy. We have the term insurance policy. This means it's only available for a certain number of years. So you can hear term 10, term 20. For term 10 is available for 10 years. For term 20 is available for 20. And you can hear term T 100. That means it's available till 100 years old. So it depends. Then you have another one which is called the universal life insurance. I'm talking about the Canadians now for Canada, but I believe it's similar in any other country where you're watching me from. So the universal life is a permanent life insurance, but it has investment in it, which means any amount you contribute into this portfolio, a certain part goes into your investment account, while a certain portion is used to pay for your life insurance. And we have the whole life. Whole life is similar to the universal life as well, in the sense that whatever you contribute is put in your investment account, and a certain part goes for your life insurance. The difference between your universal life and your whole life policy is for the whole life policy, your investment is guaranteed. Why the universal life, your investment is not guaranteed. It is according to whatever happens in the market. So today, I'm going to be reviewing a universal life policy with you, so that if you have this type of policy, you can check what do you currently have and what are the necessary things you need to look out for in your policy. So I'm going to be sharing a policy with you. This policy does not belong to anyone. It's just a sample illustration. And note that this video is just for knowledge sharing purpose. It is not a financial advice. For you to get a life insurance policy or to go into any investment, I would advise you meet with your insurance broker or you meet with your financial advisor. So in this policy, I'm assuming this person is a female. She's 35 years old and she's a non-smoker, which means she does not smoke, because your rating, your cost of insurance will also depend on your health status, your smoking status, and the likes. So the name of our imaginary client is Jane Doe. And in this policy, Jane Doe will be contributing $250 monthly. That means based on a need analysis, she has said she's able to do $250 on a monthly basis. Now, from this policy, what we can see, when you see the summary of coverage, now you can see that we have a life insurance policy of $700,000 for Jane Doe. Now, this is a permanent life insurance policy, and it's ART, which means it's an annual renewable term. It means this policy is, the cost is based on an annual basis. So because Jane Doe is 35 today, she's going to be, the cost of insurance will be charged for her at 35 years old. When she becomes 36, the cost of insurance would also increase. So it depends. You need to sit with your financial advisor to determine what best suits you. Now, for this $700,000, Jane Doe will be paying $433 on an annual basis for the cost of life insurance. Now, further down, you can see that Jane Doe has critical illness included as a rider to this policy, which means she has a critical illness plan of $25,000. If she critically falls ill and is within the 25 critical illness defined by this policy, she will be paid $25,000 as long as she survives the first 30 days. And this is a term policy, which means it's available for her for 20 years. She can renew or she can decide to not renew. So, and what she's paying for this annually is $167. Now, remember I said she's doing $250 per month. Then she's going to be doing a premium contribution for 20 years. So with a universal life, you can choose the amount of years you want to use to contribute. You can say, okay, you want to contribute for 30 years, for 10 years, for 15 years. It all depends on your financial situation and your financial goals. Now, for the first year minimum contribution, remember I said that the $250 she's contributing, a certain amount goes into her investment account, while a certain amount goes into the cost of life insurance. So if Jane Doe does a minimum of $914 for the year one, it means this policy will be active for at least 1 year. Now, the maximum she can contribute for this year, even though she has chosen to take $250 monthly contribution, she has a room that she can contribute more. So she can contribute up to $24,000 in this year as an extra, aside from the monthly contribution she's doing. And what happens is this money that she's contributing goes into her investment account and gives her more money for either retirement or for the future when she needs to take out money from this policy. Now, if you go further down, you will see she has investment allocations. Because she's putting money into an investment account, we actually need to invest this money in the market for her. And she has decided to choose the large capital, US large cap, which is the S&P 500, is representing the S&P 500, and she's taking the US technology, and she's also taking the Canadian equity 60. That's the best 60 companies in Canada. And we're assuming that this policy is going to do this investment, they're going to do 8% per annum. Now, is it guaranteed? Remember when I said Universal Life, the investment is not guaranteed. If the market does more than 8%, it goes into Jane Doe's account. And if it does less than 8%, it goes into Jane Doe's account as well. So this is based on whatever the market does. So I'm going to be sharing other things with you. I just want to take it off so I don't want to share the name of the company. So now this is Jane Doe having a universal life insurance policy with a critical illness for 20 years, critical illness. So she has a $700,000 life insurance policy. So let's see, what does the projection look like with our 8% projection in the market? What will Jane Doe have access to by the time she wants to take fund from this account? So if you have a universal life policy, you should have something that looks like this. So you should have like a projection. This is a projection, and it tells you the current year, the age, the assumed rate of return. Then we have the total return. Because this policy is a universal life with bonus, which means the company also pays Jane Doe bonus because they get dividends, you understand? So they pay Jane Doe bonus. So instead of Jane Doe getting 8% from the market, with the bonus that the company is going to be paying, it's going to be 9.3%. Now, Jane Doe is doing $3,000 annually. Remember, she's doing $250 monthly. At the end of the year, it becomes $3,000. For the year, for the annual charge, which comprises the life insurance policy and the critical illness policy, she's going to be paying $696 for the first year. And what goes into our fund value? Our fund value is our investment account. So we're going to net $3,000 from the $696 and gives us about $2,400. That's what goes into our investment account plus the interest she has made in the market at 9.3%. Now, then we have the cash value. Cash value is the account, the amount that she actually have access to. So for a universal life policy, most times the first 10 years is always the discipline period. You might not have access to your fund for you to actually withdraw cash out of your investment account. And you can see this is what we're having here. However, you have other options for you to be able to take fund out of your account. You can do something that is called the policy loan. Policy loan means that you're borrowing against your fund value. Then we have the living benefits. Living benefits is you get to assess your fund value account in case of disability or critical illness. That's the living benefit, and it always kicks in from the 6th year of the policy. Then we have the total death benefits. This is what goes to Jane Doe's beneficiary when Jane Doe passed. Then we have the side account balance. Side account means when we talked about the maximum contribution room, where I showed you the $24,000 earlier. At some point, if you go above that room, a portion is moved to your side account, and the side account is taxable. This account, the universal life policy, is not taxable, which means any fund you put into this account, it is not taxable. Like any return you make on the fund you put on the account, there's a way you withdraw it. If you borrow against it, it is not taxable. But if you decide to withdraw it as cash, then it becomes taxable. But these are all the things you need to discuss with your financial advisor. So I told you that Jane Doe will be contributing for 20 years. So you can see in year 20, Jane Doe, that's the last year of contribution. In year 21, Jane Doe does not contribute again. But the annual charges will keep going on until if Jane Doe lives up to 90 years. What happens is the annual charges is taken from the investment account. You can see Jane Doe's annual charge in year 21 is $1,400. So it will be taken from the investment account, which is the fund value account. Now, the fund value in year 20 is $27,000. Now, how much did Jane Doe actually contribute into this account? You can see it's $3,000 times 20 years, right? And you can see what she has in year 21 is actually $127,000, which is far more than what she has contributed in the account. And that is the power of compound interest, because it's been in the account and she has been compounding all the interest she has been getting from the market. And remember, this is based on 8%. It is not guaranteed. It's whatever the market does, which means if the market does more than 8%, Jane Doe gets more money. If the market does below 8%, Jane Doe gets less money. This is why I asked, when last did you sit with your financial advisor to look at what your life insurance policy is doing? You need to sit with your financial advisor every year for you to know what your life insurance policy is actually doing. And if you don't have a policy yet and you're in Canada, you're looking for an insurance broker that can actually hold your hand and come to your level, I'm available. I'm licensed in almost all the provinces in Canada. You can reach out to me and we can set up a meeting to discuss your financial goals. Now, you can see the cash value is 127 as well. Remember, I said it's just the first 10 years that is the discipline period, which means Jane Doe can actually come into this policy to withdraw the cash value even without going for retirement. You can see from year 7, Jane Doe already has money in a cash value account, which means she can actually come into the cash value to actually withdraw money. Now, the $700,000 will still be the death benefits that will go to Jane Doe's beneficiary when Jane Doe pass. Now, this is the beauty of you having a universal life or a permanent life insurance. It means you're paying yourself in the future and you're also paying your beneficiary. It's not just a life insurance policy. It pays you while you're still alive, and it pays your beneficiary when you're gone. So you can see that you can enjoy the benefits while you're alive and you can enjoy the benefits while you're gone. So this is just a summary of what it looks like for your life insurance policy. If you have one policy, meet with your advisor and discuss what your plans are. Ensure that they still meet your goal and go from there. If you don't have one and you're in Canada and you're looking for someone that can hold your hands, I'm here. You can always reach out to me and we can discuss. So have you subscribed to my channel? If you have not yet subscribed to my channel, please do so now. And if you believe this would be of benefit to someone, why not forward it to them so that they can also understand what type of policy they have. This video is just based on universal life. I will be doing another video on how you can understand your term insurance and how you can understand your whole life insurance. If you have any questions, you can leave it in the comments and I will be glad to answer your question for you. I also have a community, a free community where we understand, we learn how to make money, we learn how to manage your money and how to multiply your money. You can join the community. The link will be in the description. So you can join the community. It's free to join the community. And we learn on a regular basis what the financial market is saying and how you can actually how you can get the financial freedom we all aspire to get one day. So do you believe you've learned something very powerful from this presentation? Why not leave a comment in the comments below and just put something that you've learned in this video today. I'll be happy to share more light. If you want me to share any light on any topic, just let me know and I would gladly do that for you. Thank you and God bless you. Till I come your way next time, remain blessed.